The rise of emerging markets, where the next decade's growth may come from. The global economy is shifting. For decades, investors looked to the United States and Europe for growth. But now, the center of gravity is slowly moving east and south. From India to Vietnam, from Indonesia to Africa, emerging markets are rewriting the story of global wealth. These countries are young, ambitious, and full of untapped potential. The next great investment opportunities may not be in Wall Street, but in places most investors still overlook. The meaning of emerging markets. An emerging market is a country in transition. It is moving from poverty to prosperity, from basic industries to innovation and consumption. It is where the future middle class of the world is being built. Think of emerging markets as the teenagers of the global economy. They grow fast, make mistakes, but have endless energy. For investors, that volatility brings risk, but also unmatched opportunity. When you invest in an emerging market, you are investing in growth itself. You are betting on education, infrastructure, and technology transforming entire societies. That is why every decade, a few of these countries break through and join the ranks of the developed world. A shift in global power. For over a century, most of the world's economic output came from the West. But that dominance is fading. The 21st century belongs to those catching up. Emerging markets now account for more than half of global GDP when measured by purchasing power. That means their citizens are buying, building, and producing at record levels. The world's economic story is becoming more balanced. The pandemic accelerated this shift. As supply chains broke, local industries in Asia and Africa stepped up. Self-reliance became the new advantage. Demographics, the ultimate driver. Demographics are destiny. Countries with young populations have energy, innovation, and growth built into their DNA. And right now, emerging markets are home to the youngest populations on Earth. In India, the median age is under 30. In Nigeria, it is just 18. Compare that to Europe or Japan, where populations are aging and shrinking. A young workforce means more consumers, more workers, and more taxpayers. It means growing economies driven by ambition, not decline. That demographic momentum is a massive economic engine waiting to be tapped. Technology leapfrogging. Emerging markets do not need to follow the same path as developed nations. They can skip steps through technology. This process is called leapfrogging. For example, Africa largely skipped landlines and went straight to mobile phones. Now millions use digital wallets and payment apps instead of banks. Entire economies are being built on smartphones. In Southeast Asia, small businesses sell through social media instead of malls. Farmers use apps to track weather and pricing. Innovation grows faster when it does not have to replace old systems. Infrastructure and urbanization. Every developing economy goes through a building phase. Roads, ports, railways, and cities become the backbone of future prosperity. Right now, that construction boom is happening across Asia, Latin America, and Africa. China showed the world how infrastructure transforms a nation. India and Indonesia are now following that blueprint, investing billions in modernization. Urban centers are becoming the new engines of opportunity. As rural populations move to cities, productivity increases. Jobs multiply, incomes rise, and consumption explodes. This urban wave is creating the next generation of consumers and entrepreneurs. The rise of the middle class. At the heart of every emerging market is one thing: the rise of the middle class. When people move from survival to stability, their spending patterns change. They buy homes, cars, phones, and better food. In India alone, over 400 million people are entering the middle class in the next decade. In Southeast Asia, the number will double. That demand drives domestic companies and global brands alike. A growing middle class is not just an economic story. It is a story of human progress. Each purchase represents better living standards, more comfort, and new aspirations. Case study: India. India is one of the brightest stars in the emerging market universe. It is now the world's fastest-growing major economy. With over 1 billion people and a young population, its potential is staggering. Technology is driving India's transformation. Its startup scene is exploding, producing unicorns across fintech, education, and logistics. The country is positioning itself as a digital powerhouse for the next century. Infrastructure and manufacturing are also accelerating. Global companies are shifting production from China to India. As wages rise in developed economies, India's cost advantage grows stronger. Case study: Vietnam and Indonesia. Vietnam has become one of Asia's most impressive success stories. Once a low-income nation, it is now a manufacturing hub for technology and apparel. Companies like Samsung and Nike rely heavily on its factories. Its government has focused on trade, stability, and education. That has attracted investors and built trust in its economy. Vietnam's middle class is growing rapidly, creating a strong domestic market. Indonesia is another quiet giant. With more than 270 million people and rich natural resources, it is a regional powerhouse. The country is investing heavily in green energy and digital finance. Case study: Africa's untapped potential. Africa is the final frontier for global growth. It is home to 1.4 billion people and a median age under 20. That youth is both its challenge and its greatest strength. Countries like Kenya, Nigeria, and South Africa are becoming innovation hubs. Mobile money, agriculture tech, and renewable energy are leading the charge. The continent is building a digital economy without waiting for the old one to fade. Africa's rise will take time, but its trajectory is clear. With investment, stability, and education, it could become the world's next growth engine. The opportunity is massive for those who look long-term. Risks and reality. Emerging markets are not without challenges. Political instability, corruption, and currency fluctuations can create sudden shocks. Growth is never a straight line. Investors must remember that higher returns come with higher risk. That is why diversification is key. Spreading investments across multiple countries and sectors reduces volatility. Patience is essential. These markets move in cycles, but the long-term trend has always favored development and progress. How to invest in emerging markets. You do not need to pick individual stocks or companies to participate. Exchange-traded funds, or ETFs, make it easy to invest across countries. They give you exposure to entire regions with one trade. Look for funds tracking indexes like MSCI Emerging Markets or specific regions such as Asia or Africa. These capture the broad growth story while minimizing individual risk. The goal is exposure, not prediction. The best strategy is gradual accumulation. Add to your position consistently over time. Treat emerging markets as a long-term engine, not a quick bet. The future of global growth. By 2030, nearly two-thirds of the global middle class will live in emerging markets. That means most new demand for goods, energy, and technology will come from these regions. The economic map of the world is changing. Innovation will not just come from Silicon Valley. It will come from Bangalore, Jakarta, and Lagos. The future economy will speak in many languages. For investors, that means opportunity on a global scale. The next Tesla, Amazon, or Apple could be born in a country most people cannot find on a map. Growth no longer belongs to one nation, it belongs to everyone. Final thought. The rise of emerging markets is more than an investment story. It is the story of human progress. Billions of people are stepping into prosperity for the first time. For the patient investor, that progress translates into potential. The key is to think long-term, diversify, and stay curious about the world beyond your borders. The next decade's opportunities will reward those who look where others are not. Because the future of wealth is already being built, just not where most are looking. This is not financial advice. It is financial awareness and a reminder that the next wave of global prosperity may start far from home.